Welcome to the Spokane and Coeur housing market update. It's February 2025. In this video, I will bring you the facts that you need to know about the national as well as local housing market so that you can be an informed home buyer or home seller. It's that simple. My name is Phil Wells. I'm a real estate agent licensed in Washington and Idaho. If you want to talk to me privately about anything, my details will be in the description to this video. Before we get going, go and follow me on Instagram. That's where I'm most active throughout the month. You can also DM and interact with me there too. So let's get on with it. Looking at the most recent data that we have for national pending home sales, contract signings were down 5.5% from November into December, and December 24 versus December 23 shows that sales declined 5% on a year-over-year basis. As you can see from this graph of year-over-year increases and decreases, the trend of positive year-over-year sales growth seems to have halted and actually reversed in December at the national level. Obviously not what we want to see, but those are the facts. Now, it is typical to see a decline in sales in December on a month-over-month basis, but when it comes to comparing December in 23 to December in 24, a 5% decline is not what we want to see and cannot be explained by normal seasonality. Now, looking at the behavior of the 30-year fixed mortgage, from December 1st to present day. The 30-year conventional mortgage at the start of December was at 6.86%, and by the end of December, they were at 7.07%. Today's rates have largely tracked flat since the end of December, and right now, February 10th, they are at 7.01%. Now, we are seeing the Federal Reserve hold the Fed funds rate steady at 4.5% after cutting them a full 1% over the last 6 months. Now, I know that mortgage rates are not directly related to the Fed's fund rate. They more closely track bond yields, but the overall economy runs on how much money costs to borrow. So it is foreseeable that the glide path for rates is down in the future. Lots of people are predicting that mortgage rates will be around the low 6.3% mark by Q4 of this year, but we'll have to wait and see on that. Right now, though, they are stubbornly staying around that 7% mark. So what about mortgage applications? How many people are actually applying for these 7% mortgages right now? This data that we get from the Mortgage Bankers Association on mortgage applications is great because it's so up to date. We don't have to worry about looking at December's figures when we can be looking at just last week's figures to get a gauge of what buyer demand is doing. As we can see on this bar chart, in December, as we saw poor pending home sales and rates increase, the natural outcome of this was that dip that we can see in mortgage applications in December. We then saw a freakish 33.3% increase in applications in the first week of January. This goes back to what I was saying at the start of this video. There are more buyers coming into the market this side of the new year. The market is seemingly heating up. I'm seeing this in my personal business. I'm busier now than I have been at any point in the last 18 months or so. And I'm not the only one. I'm talking to other agents that are reporting the same increase in buyer demand. Let's quickly visit the last 3 metrics that I wanted to cover on this national section. Inventory is currently sat at around 3.3 months worth of supply, which is in the buyer's market territory, but it's still a reasonable amount of inventory out there. So one thing that continues to baffle me is these increasing home prices. We have buyer demand artificially brought down to a low level by these high interest rates. We have somewhat of a reasonable inventory level, and we have record lows in terms of pending home sales. How that translates into consistently rising home prices does confound me a little bit, but those are the facts. And days on market we can see are creeping up slightly. They are currently at 35 days on market on a national basis. Now let's look at the Spokane market and see how it compares to that national picture that we just outlined. Just a note on these figures, we are looking at actual closed sales in January. On the national level, we were looking at pending home sales from December. So just know that it's a pretty good comparison, but it's not perfect. Sales here ran in the other direction to the rest of the nation and are up 11.8% year over year. Like I said at the open, locally things are heating up. Median home prices in Spokane were at $390,000 in January. Those are up here in Spokane 1.3% on a year-over-year basis. This month, therefore, was a modest increase in terms of prices, but the constant push of home price growth continues here in Spokane. Inventory continues to be lower than the rest of the nation's inventory levels. We're at 2.9 months of supply here in Spokane, and the number of new listings here in Spokane was up 22.7% on a year-over-year basis, which is something that my clients have commented on this past month. They've been pleasantly surprised to see lots of new hits in their inbox when they go house hunting on a daily basis. You can see days on market of 15 days. That's been cut in half since last month when we were at 30 days on market. Again, as I said on the open, the weather might be cold, but the housing market here in Spokane is heating up. So all things there in Spokane pointing towards that classic Spokane recipe that we always see of low inventory and continually increasing home prices. Now let's move on and look at the Coeur d'Alene housing market and see how it compares to that national picture that we outlined before. Just like with Spokane, actual sales in January ran in the other direction to the rest of the nation's 5% declines. Here in Coeur d'Alene, we posted a 13.6% increase on a year-over-year basis in terms of actual sales. Right now, as it stands in February 2025, people want to buy real estate in the inland Northwest. The months of supply are at 3.79. That's the lowest I've seen inventory here in Coeur d'Alene for a very long time. We need to be careful here. Low inventory might start to put real upward pressure on prices. And as we can see, median home prices are already pretty high. They're at $530,000, which is up 12.71% on a year-over-year basis. Median days on market in the Coeur d'Alene area are currently 104 days on market. That's only one less day than this time last year. So in Coeur d'Alene, homes are spending quite a lot of time on market. The median days on market is 104 days, but homes are selling, and they're selling for a lot. That's it for this video. Very condensed and lacking in some of the analysis that I usually put in there, but all the facts are there. If this video was helpful, please like and subscribe. That really does help me out. If you want to talk to me privately about anything, maybe you're looking at buying, selling, or investing in the Spokane or Coeur d'Alene markets, my details, like I said, will be in the description to this video. Like I said, my name is Phil Wells, and thank you for watching.